U.S. equities are attempting to stabilize after another plunge, no thanks to more worry associated with fresh reports of coronavirus cases outside of China. Investors are a lot more concerned about the outlook for the global economy at a time when there just isn't all that much left in the central bank policy accommodation and government stimulus tanks. There's been a lot of talk about this growing pressure being put on the Fed to make additional cuts, and we wonder if the Fed will be forced to respond to this pressure of a falling stock market instead of waiting to see what the fallout actually is and if it truly necessitates a move in this direction. The Fed needs to be careful, even if it does have more room to respond, as it will leave itself in a far more uncomfortable position to respond to whatever it is that ends up being the next shock that comes along. We believe this to be the bigger problem at this point in the cycle after a decade plus of proponomics. Our point is that if it isn't coronavirus, it will be something else that comes along that exposes a stock market that has run up way too high at a time when rates are still sitting at emergency levels over a decade after the crisis of 2008. As far as currencies go, it's clear the US dollar has been a beneficiary of a lot of the flight to safety. And while we continue to expect this to be a trend when talking about commodity and emerging market FX, we aren't as convinced that the path forward will be as solid for the buck relative to its major currency peers. If the Fed does have more room to move, it should make the other safe haven majors more attractive on a yield differential basis. And we also need to remember that the U.S. administration will still be looking to employ its soft dollar policy strategy. With that said, we would be on the lookout for more U.S. dollar weakness against the majors in the sessions ahead, with even some oversold commodity and emerging market currencies in position to rebound on technical positioning after taking such a huge hit. That's all for now.